Hey everyone, it's Ben Hardy here, and in today's video, we're going to be talking about how there are massive changes happening in the dealership finance department, and how these changes are actually going to benefit you a lot as a customer. Before we get into this video though, as always, if you want to save time and money the next time you purchase a car, link to my car buying guide in the description down below. And then if you want to see more videos just like this, then I recommend you subscribe because I post this type of content every single day. Let's get into it. So if you've been following my videos or videos that are made by other people on the topic of the car market, then you know that the car market is not in a good place right now. It went from complete euphoria in 2021 to complete dysphoria in 2022, if that's even a word. My English is horrible sometimes. But regardless of that, all you need to know is that everything's done a 180 with the market. And so every single position at the dealership is feeling the changes, especially the finance department. And to set the stage for how big the changes have been for the finance department, let's quickly talk about what it was like to be a finance manager in 2020 and 2021. If you're a finance manager back then what you would have experienced is really low interest rates, so pretty much everyone was financing, and then again, a market where prices were pretty much going up on a daily basis, and customers were buying what was ever on the lot, and they were also buying whatever you shoved down their throats. I mean, I had so many stories from finance managers that I know that basically made insane amounts of money over the last couple of years because people just bought everything when it came to product, and they didn't really seem to care. Like the finance manager would just be like, hey, here's this, your payment goes up by $50 a month, sign here. And then people would be like, oh, sure, yep, sign me up. And it was that simple. But obviously the market has changed a substantial amount. Interest rates are up, inventories are up, and there are less buyers in the market today than there were a year ago. And dealers are feeling it, and especially finance managers. And so this is basically what I'm hearing from finance managers is, first off, because of these higher interest rates, it's a lot more difficult to convince people to finance a car, or just to convince people to buy a car in general. There are a lot of dealers that are losing car deals because of these high interest rates. Like they just can't convince people to buy the car because the payment is just simply too high. And again, with the massive increase in car prices and now these interest rate increases, it makes sense why people aren't able to afford these car payments. Everything's just a little bit too expensive right now, but this is just ultimately leading to more cash deals when deals are getting done. I have several finance managers that I talked to that have told me that they went from an 80 to 90% finance rate to now some of them are as low as like 50% and even under. And that is completely unheard of, because when I worked in the car business, during a quote unquote normal market, almost everyone financed. It wasn't quite up to the almost 100% rate that we were seeing with some dealers, because again, interest rates were so low, but it was closer to the 80-ish% range. And so being under 50% with your finance rate, I mean, that is just absolutely insane. That really is unheard of. But people just, again, they don't want to pay the interest rates, and there are enough people that have saved up enough money over the last couple of years with those good old stimmy checks that, well, they have enough money to pay cash for a car instead of financing it. So that's the first big thing that is affecting them. And then the next big thing is just overall profitability with product is also just not there anymore. Again, last year, finance managers were able to charge whatever they wanted for back-end product, whether it be warranties, extended service contracts, tire, repair, whatever the heck it is. They can't do that anymore because, again, it's difficult enough to convince people to buy a vehicle today with where payments are at, and then trying to convince them to add another 15, 20, 50, however many dollars per month on top of that payment. It's a really hard sell. And so finance managers are having to discount their product like crazy. And the other half of it is people are just becoming more and more educated. A few years ago, it was pretty rare if someone knew that, the finance product that was only an extra $15 per month was actually thousands of dollars that they were paying for that product because it's over the course of the entire loan. Whereas now most people know that. They understand that, oh, it's not actually just $15 per month. It's thousands of dollars that I'm paying for this product. And so I, probably shouldn't pay that. And on top of that, people realize now that they can actually negotiate that. It's not just oh, because finance managers will always sell it as a bundle deal. Oh, here's this bundle deal that you'll get with this, and it only comes out to this amount instead of this amount, right? And so Again, the education, frankly, is also helping out quite a bit. And then there's also just the mentality that, people just don't need it. They don't want it. They don't think that they're going to keep the car for long enough for it to make sense. There's a lot of reasons go into it. But the main point is that finance managers are not able to make nearly as much money off of their back-end product. And so you can see that they're getting kind of impacted from all directions. The dealerships that they work for are selling fewer cars, which means that they have fewer deals that they can, throw darts, right? It's like a dartboard, right? You're throwing darts until you get that bullseye as a finance manager. So there's fewer darts for them to throw. And when they are throwing those darts, they're either completely missing the board or they're definitely not getting that bullseye anymore. And speaking of, these customers not financing, that's another part of this whole equation. You see, when someone finances through the dealership will get a kickback from a lending institution, even if they don't hold rate. What you'll typically hear when people talk about car buying advice is they'll say, oh, well, if the dealership holds rate, then they'll get, paid a kickback from the lending institution. That is true. If a dealership basically shows you a 5% interest rate and you actually qualify for a 3% interest rate, then lending institution will give you a little bit of a kickback for that. But if the dealer shows you a 3% interest rate and you qualify for a 3% interest rate, the lending institution will still give the dealership kickback. It won't be as big, but they'll still get something. But the dealership obviously is not going to get a kickback whatsoever if there is no financing that is happening. Now, I know that was kind of long-winded, but we can now dive into how you can actually use this whole situation to benefit you as a consumer. First off, dealers want you to finance with them again. And this is something that is actually pretty new because over the last couple of years, dealers didn't care if you finance with them or not. Because again, they were making so much profit off of the car itself because of how overinflated prices got. They didn't care about the whole finance kickback situation. They're like, yep, we are already fat and rich. We don't care where you get your money from. If you want to finance with us, great. If you don't, we don't really care. But obviously things have completely changed. And so since dealers want you to finance with them, there's two big things that you can use to your advantage. First off, you can go and get pre-approved at one of your local credit unions or banks and basically get an approval rate which is completely in line with your credit. And then you can take that pre-approval to a dealership and say, hey, I will let you do my financing if you can beat this rate. Which means that the dealers, again, that wants to have you finance through them is going to go to work and get you a better rate than what you would most likely be able to get for yourself. So you're saving money on that front. And then the next side of it is you can actually work financing into getting you a better price on the car that you're purchasing because, again, a lot of dealers will basically want the financing so bad that they'll go, okay, I'll discount the car another $500 or $1,000 if you finance through us. And again, you can go and make that offer to the dealer. You can go, hey, I know you get a kickback from the lending institution. Here's the deal. I will let you arrange the financing if you give me another, X amount off of the vehicle. And so again, it's a big benefit to you overall. Now, the next big benefit with this situation is these finance managers, right? They're hungry. Again, their dealerships are selling fewer cars and they are financing fewer cars, so they're getting less kickbacks from lending institutions. And because interest rates are already really high, it's really hard to hold rate right now for most dealers, and so they're not getting as big of a kickback. And people aren't buying as many warranties, and they're not paying as much for warranties. So they're going to want to sell you things. And the thing you have to understand about a finance manager is they would rather sell you a warranty at complete dealer cost than not sell you a warranty at all, because it actually looks better for a finance manager if they've sold something rather than nothing, even if they haven't made any money on the product. And again, this is something that you can use to your benefit. And so I know there are people in a camp that basically say that you should never buy dealership warranties, that they're all garbage. I don't agree with that. Some of them are garbage, but some of them actually have big benefits. And the example I'm going to give is like a windshield replacement program. So I just sold my Ram TRX, and my Ram TRX happened to have a fancy windshield that has adaptive cruise control built into the windshield. Now, this windshield, when it needs to be replaced, is like almost $2,000. I got a big old crack in the windshield right before I sold it. And so, yeah, you can make the conclusion that it was a pretty expensive situation. Now, windshield replacement itself is actually pretty cheap through most dealers. The actual cost itself of the product is usually only like a few $100. And so if I had windshield replacement on my Ram TRX, I would have been able to get that new $1,800 windshield at no extra cost. Now, I know that this sounds ridiculous. You can be like, well, how does the, warranty company make any money? Well, they're just like insurance companies. They assume that the average person that buys a warranty from them is never going to use it. And so that's just free money for them. Now, obviously, they know that there's a group of people, a minority, that's actually going to, use the whole warranty. And so they're going to subsidize the cost of that with all the people that don't basically use their warranty. It's the same thing with insurance companies, right? Insurance companies assume that most people are never going to submit an insurance claim, but the small group that will, they'll subsidize the cost with everyone else's insurance premiums. And so it works the same way, but what it does for everyone is it brings down insurance premiums, because if we had to pay insurance rates that were actually at like how much it costs to replace things with cars when you total them and everything, like everyone's insurance rates would be ridiculous. So the same thing applies to warranties. Now, the general rule of thumb here, obviously, the cost is going to vary with these items, is if the item is being sold for anywhere near the replacement cost of the item, then that means it's most certainly marked up, because again, these are subsidized, and so typically the actual cost of the warranty or whatever it may be from the finance department is going to be significantly lower than the replacement cost of the item. And so really, you can just use this whole situation to your advantage to save you money all across the board. That's pretty much going to sum things up for today's video, and it's going to be interesting to see how this evolves, because yeah, people at dealers are definitely starting to get hungry. I mean, a lot of these finance managers that I talk to are making, 50% and sometimes even like 30% of what they were making during the pandemic, which is crazy. I mean, imagine going into work one day and you're making a certain amount, and then the next day you're making a third of what you were making. Like, that's what some of these finance managers have experienced over the course of the 2022 sales year. And so it's a rude awakening. And I'm seeing a lot of people actually just quit. Like, they're leaving finance because they're like, yep, I'm not interested anymore. Like, because it's a really stressful position at the dealership. And so, yeah, we'll see what happens. But, I guess as always, as a consumer, you can always use the situation to your advantage. When you have a little bit of food and there's a hungry dog, they'll do a lot to get that food. So anyways, that's all.